The thing is, when it comes to S corporations, sometimes you might have to revoke the S corporation status because stuff happens, right? So in today's conversation, I want to talk to you about why and how to revoke an S corporation. So here's an overview I want you to pay attention to. So many small businesses operate an S corporation to avoid the complexities of C corporations and to avoid double taxation, right? And C corporations are taxed before money is distributed to their shareholders, who are taxed yet again. So that's what the double taxation is a killer. On the other hand, the income of S corporations flows directly to shareholders who pay for taxes on their personal returns. So here we have a simple taxation sort of process. So there is sometimes a day, however, when an organization outgrows its S corporation status and the company would like to revoke it in favor of operating as a C Corp. It is not particularly difficult though. So what I want to do here is I want to explain to you step by step what you need to do. Now, first of all, let's talk about reasons to revoke S corporation status. And the thing is that the S corporation status is actually a great structure for many small businesses, but there are actually certain reasons that at some point may actually make it not really interesting. First of all, you have the changing tax law. So basically, the TCJA of 2017, the Tax Cuts and Jobs Act, basically lowered the corporate tax rate. So depending on circumstances, that may make it beneficial for some companies to revoke S corporation status and operate as C corporations despite the double taxation, because right now the C corporation tax rate is at 21%, which is really, according to some experts, very low. You also have the 100 shareholder limits. So S corporations have 100 shareholder limits. So if a company exceeds that, they have no choice but to revoke S corporation status. And another reason is that you have shareholder restrictions, right? Anyone can own stock in a C corporation. No problem. But ownership of S corporation stock is somewhat limited. For example, you must be a U.S. citizen or a resident alien. Also, LLCs and corporations may not hold shares in S corporations. So the thing is that when it comes to S corporations, the conditions might be a little bit restrictive at times. Okay, and so that restriction really sort of puts off certain people or certain investors, so to speak. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Another reason that can actually make people revoke S corporation is the desire for outside investment. Right? It is significantly easier for a C corporation to attract investors and bank financing than an S corporation. One of the reasons is that shareholders of C corporations can freely buy and sell shares that give them ownership rights, and venture capitalists are not able to invest in S corporations at all due to tax law and their own governing documents. So it's also impossible for a company that plans an IPO to operate as an S corporation due to the 100 shareholder limits, right? Because basically, if you're trying to really raise the funds on a public stock exchange, then you can't really say, I'm only going to have 100 shareholders. It's just impossible when you really think about it. So another reason is that you have increased liability and risk protection. So a C corporation is a separate entity from the shareholders, and those seeking to enforce debts and other obligations are limited to seeking them from the C corporation itself, and not individual shareholders or officers. Of course, there are exceptions, such as when the corporate veil is pierced. And so therefore, a shareholder will never lose more than the amount they invested in the corporation in the first place. So this is kind of appealing to shareholders of C corporations. So one thing I want to say here is that when we talk about an S corporation in general, this is actually a very beneficial, a fiscally beneficial status for small businesses, for entrepreneurs. But once you actually pass a certain level in terms of your operational growth, like once you start making money, I'm talking 6 digits or 7 digits in some cases, and you seek bank financing or you seek some kind of financing, you really need to actually think about whether the S corporation status is better for you or the C corporation instead, especially if you want to seek foreign investments, because that foreigners cannot really invest in an S corporation. So that's why a lot of folks, they just want to switch to a C corporation, which is more flexible, but also administratively demanding though, because you have a lot of paperwork, you have board of directors, and so on and so forth. Boss, I want to quickly remind you of today's topic. We are having a conversation about why and how to revoke an S Corporation. Another reason why you might want to revoke an S Corporation is that corporate funds without paying personal taxes. So if the company wants to hold on to, let's say, hold on some of its profits and use them in the future to invest in R&D, research and development, or for some other reason, shareholders of an S Corporation will still be taxed on this money even though they never saw it. In the case of a C Corporation, shareholders are only taxed on the dividends distributed to them. So in other words, when you have a C Corporation, you basically can have something called retained earnings. So retained earnings is basically the portion of your revenue that you do not distribute to your shareholders. So you retain the earnings in the firm. So basically, when the earnings are retained, the shareholders are not paying taxes. You know, that's the thing, because people always talk about double taxation. Yes, but the double taxation happens if the earnings are distributed to the shareholders. Okay, so this is pretty good. And also another reason is that you have limited management participation by shareholders. So the management rights of C Corporation shareholders are limited to electing directors and voting on certain major decisions concerning the structure of the organization, such as the merger, and shareholders who actually don't have any say in the day-to-day management. This is kind of important because imagine you have investors who are like shareholders who are really vocal, who really want to actually push the company in a certain direction, but they have no idea what the industry is about, or their ideas their ideas are really just not good. So you want to have this segregation of duties here. You want shareholders to actually have power, that's for sure, like, you know, electing a board of directors and also participating in when it comes to voting on certain important aspects of the business. But you really want to actually assign the day-to-day management of the business to folks who have experience, to professionals, to folks who have really acumen in the specific industry the company is in. This is really important because, I mean, if you are in a very competitive environment and you actually assign the stewardship, the leadership of the business to unexperienced hands, you're not going to succeed. The company will file for bankruptcy real fast. So this is really good. Having this limited management participation by shareholders is really cool. Now, let me give you the steps that you need to really take if you want to revoke an S Corporation. So the first thing you need to do here is that the first step is you need to take a shareholder vote. Now, over half the shareholders must agree to revocation for it to proceed. I'm talking about at least 50%. At least 50%. So all state laws and bylaws must be observed, such as giving shareholders appropriate notice of the vote. This is kind of important because, you might be thinking, well, this is pretty straightforward, but it's not. If your S Corporation basically has shareholders in, let's say, 5 states or 15 states or 25 states, you got to give appropriate notice to all of those shareholders in all those different states. Now, the thing is that the tricky part is that the S Corporation laws are different from state to state. So you got to really make sure that you comply with all the laws in the specific states where the shareholders actually live. Let me give you an example. Let's say you have shareholders in New York, New Jersey, and Connecticut, right? And you are basically thinking about revoking the S Corporation. You gotta send the appropriate notice to shareholders in those 3 states. But the thing is that if those 3 states those 3 states have have regulations around the timing. Let's say New York says, you know what, you got to send an appropriate notice 90 days before the vote, and Jersey said you got to send a notice 30 days before the vote, and Connecticut said you have to send a notice within 45 days before the vote. So this timing difference can be really important, especially if you have multiple states. But the bottom line here is that you want to really comply with the regulations in all those states. And like I said, we got to have over 50%. You got to have over half the shareholders. And the thing is that everything goes back to the S Corporation's, operating agreement, or let's say a corporate charter. So you want to have an internal document that specifies how those things should work. So this is kind of important because, again, if the S Corporation operates across multiple states, you want to make sure not only federally, but also state-wise, you are in compliance. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about why and how to revoke an S Corporation. So the first thing is you need to take a shareholder vote. The second thing you need to do here is to send a letter to the IRS. This is so important. So send a letter signed by all shareholders who voted for a revocation to the IRS where you file your annual tax return. Okay. It must also be signed by the person who signed the tax return. So there is no form, but the IRS outlines what the revocation letter should state. So basically, you got to have the letter should have the following table of contents. So the corporation revokes the election made under 26 USC 1362A. You got to put the names of the shareholders, their addresses, the taxpayer identification numbers of the shareholders. So here we're speaking about their social security numbers, the number of shares of stock owned by each shareholder, dates on which the stock was acquired, the date on which each shareholder's taxable year ends, the name of the S Corporation, the S Corporation's EIN, the election which the shareholders revoke. The statement must be signed by the shareholders under penalties of perjury. And so which means what? This is really like this is a legal act. So you better be sure that's what you want. And also the signature and consent of shareholders who collectively own more than 50% of the number of issued and outstanding stock of the corporation, whether voting or non-voting. This is so important because, see, the thing is that this process, this sequence that I just gave you, the IRS wants everybody to actually go through it. The IRS wants everybody to follow it because the agency has an internal protocol to review all revocation requests. It's one of those things where if you have a quote-unquote a convoluted S corporation, it's just better just to assign the task to a lawyer, and like a tax attorney or somebody of that caliber can really help you out. Draft a letter and take care of the whole process so that your revocation is actually officialized with the IRS. Now, it's important to really send a letter to the IRS because an S corporation is a federal affair. So basically, in no state in the union is there a legal structure called S corporation. You have C corporation, you have LLC, you have a partnership, but you do not have S corporation. You only have S corporation at the federal level. So let's talk about when an S corporation revocation goes into effect. The thing is that you actually taken a vote and you've sent a letter to the IRS. So what are we talking about in terms of timing? Okay, now if you want the revocation to go into effect on the first day of the tax year, the revocation letter is due by the 16th day of the third month of the tax year. Let me just repeat that. If you want the revocation to go into effect on the first day of the tax year, the revocation letter is due by the 16th day of the third month of the tax year. If the effective date of the revocation is to be any day other than the first day of the tax year, the IRS must receive the revocation letter before that date. Let me give you examples from the IRS websites. So for example, the S Corporation is on a December 31st tax year ending and request a revocation effective January 1st. So the revocation is due March 15th. And another example is the S Corporation is on a December 31st tax year ending and request a revocation effective February 14th. Now the revocation is due February 14th. So the bottom line here is that you really need to you need to abide by the internal protocol that the IRS has. It's one of those things where because the S Corporation has special treatment, and not only in terms of the taxes, but also in terms of the administrative paperwork going into it. That's why the IRS wants to have a little advance notice. Now, one thing I need to say here is that when we talk about timing, it's one of those things where you have to coordinate. You have to coordinate with all shareholders. And this is not easy, especially if you have the shareholders not living in the same state. Then you have to coordinate. You have to make sure everybody gets back to you. Everybody agrees to the decision to revoke, and also actually vote on time. So you want to actually vote as soon as possible so that you can actually send the letter to the IRS. Now, one thing I also need to say is that when we talk about revoking the status, you got to prepare for the C corporation status, because once you transition into C corporation mode, then you have to really abide by a different set of rules. Let's talk about whether you can retroactively revoke an S corporation election, okay? And because the thing is that, sometimes this happens. Now, should you be late filing for an S corporation election, it may be possible to qualify for the late election relief for reasonable cause. However, should you desire to revoke S corporation status and miss the date as described earlier, the IRS says there is currently no provision which allows such action. And so basically, the only way that an S corporation can be revoked outside the time limitations described earlier is if you previously committed some action that compelled revocation of the S corporation. So you may not choose when it is revoked because the inadvertent action itself causes revocation. So if you would like to revoke S corporation status retroactively, which is impossible to do through a filing, your only real hope is actually to look back to see if an action was previously taken that would result in revocation. So actions that are not permitted, S corporations basically, and therefore may result in revocation, include the following. So there are more than 100 shareholders. Stock is held by a person who is not a U.S. citizen or a resident alien. So estates and certain types of tax-exempt entities and trust may hold shares, however. So an LLC or corporation holds the shares, which is actually forbidden for S corporations. The S corporation has more than one class of stock. I'm just giving you items that could have resulted in automatic revocation. Okay, and the S corporation does not use an approved tax year, and the S corporation derives over 25% of its income from passive sources for three consecutive years, and passive income is from income such as investment, which is not generated by the corporation's activity. So it's one of those things where, again, like I said before, from an administrative point of view, an S corporation is very sort of strict. It's not really that flexible. I mean, it has a lot of advantages in terms of like a lot of fiscal benefits, but it is also strict in terms of the protocol you need to follow. So basically, if you had committed, quote unquote, committed some of those acts that I just listed, then yes, the S corporation could have been revoked retroactively, but you cannot do it, through an act like a normal act of filing. No, you can't do it, at least as of the date of this show. Thank you so much for your attention. I really appreciate it. In today's conversation, I spoke to you about why and how to revoke an S corporation. So I give you the overview. I spoke to you about the reasons to revoke S corporation status, and then I give you the steps to do so. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.